All right. Thank you guys for joining me. It's hard to tell when these things are live. I've got a couple different things going on here. My name is Jason Bosch, and this is another episode of If We Are Honest. And I've actually been looking forward to doing this show for quite a while. I did a show I guess it was last year. I'm not sure, it might have been last year. I have to check the date on that, but quite a while back, many months ago, with John Titus, whose work I've been following. He has a YouTube channel on looking at the monetary issues. It's called Best Evidence. And so I interviewed him and wanted to do a follow-up, but he's been very busy working on a whole bunch of different things, working on videos and also working on articles. He's done some stuff with Solari Report and Catherine Austin Fitts. And so finally, after nagging him for quite a while, I've got him back with us. So John Titus has been a patent attorney for 25 years. And about 10 years ago, he got into filmmaking after what happened with the 2008 financial debacle, and kind of looking into that and questioning what's going on there. And so he's basically immersed himself into studying money, the history of money, and our current monetary woes, seeing as so many of our problems are actually downstream from that. And there are very few people that are actually looking at these issues from that perspective. So with that, let me bring John in. Hey, John, how you doing?
Jason, thanks for having me back. It's good to see you.
Thank you so much. So you want to real quick? I'm just going to check the stream, but I'm going to have you just kind of give a quick intro to kind of where you're at in all this process. I think that obviously you were researching this back in 2008, and moving forward, but a shift happened this past year, year and a half now, correct? Do you want to kind of just give us a quick overview of kind of where you're at right now with all of this?
Yeah, I'll say a couple things on that score. One, when I got into this back in 2008, it was as an observer who was perplexed by the chasm that was between the mainstream media on the one hand and what was actually going on in the financial system on the other. They were two different things. It was like they were describing two different sets of events. I mean, the reality was there was a lot of fraud going on in the financial space, and it simply was not being covered honestly or thoroughly by the mainstream media, and that piqued my interest, and I just kept at it, and it sort of became a hobby. Eventually, though, those banks that were at the helm of that began foreclosing on people illegally and ginning up evidence and basically perpetrating frauds on the court throughout the U.S. and stealing people's houses. And that's when I shifted gears from just an observer to really, I guess, an activist or a filmmaker. I wrote a film, wrote and produced, meaning I paid for it, called Bailout. In 2011, I think it came out 2012. But I did all that early on, not knowing how to turn on a camera. I just hired people. It was expensive. And after that, knowing that this wasn't going to abate, that the frauds which were going unpunished, you're just going to get more of those frauds because you were not punishing, you were rewarding crime in our system. I eventually learned how to turn on a camera and make videos myself, but that was a very slow process. In that process, you can see reflected on my YouTube channel, Best Evidence. I think one of my earliest videos are probably 2014. That was when I bought a camera. I've gotten better at producing videos over the years. And of course, the crime, it was so predictable, continued unabated. I shifted gears again in about 2013, 2014, when the Department of Justice, of course, the banks are doing wrong. Everybody knew that. That was old hat by 2013, 2014. But my focus then became, well, why isn't the Justice Department didn't do anything about it? And so I did a couple of videos about that. I watched that for a while. Then there's been a recent gear change again, another shift in early 2020 with the pandemic, with all the the kerfuffle over the pandemic. The pandemic provided a lot of coverage for malfeasance and wrongdoing in the financial sector. Wrongdoing, from my point of view, where the locus of let's just say curious activity shifted from the banks and from Wall Street really to the Fed, and it was the Fed then that was basically printing up money. It was QE on steroids, quantitative ease on steroids, and they were buying assets from banks. But the way they were doing it, of course, that wasn't brand new. That had been done in the wake of the financial crisis. The Fed quantitative easing, basically printing money out of thin air and buying assets from banks. That had been done as early as 2009 in the wake of the global financial crisis. So that part wasn't new. What was new was that if you look at and you understand the monetary system, and it took me a while to understand the monetary system, the key thing you have to understand is that the Fed's money is in a separate circuit than your money and my money. We are on the retail circuit, they're in the wholesale circuit. And back in 2008, 2000, I didn't understand that. I didn't get it. I thought, well, you printed up all this money and you're buying these assets, that's going to result in inflation. And it didn't, and it perplexed me. And the reason it didn't is the Fed, when it prints up new money, that money is reserves. That electronic money exists as reserves. It doesn't get into our bank system at all, the one that you and I use. So what's happened under the cover of the pandemic is this time the Fed has printed up reserves again by the trillions, $3.5 or $4 trillion, and it has purchased assets again. Nothing new there, but this time you're seeing a parallel increase in the supply of money in our bank circuit, which I'll call the retail banking circuit. You can look at the money supply in the retail circuit, and it is now in lockstep with the Fed's creation of reserves in the wholesale circuit, and that's never happened before. And I've been documenting that lately on my channel, and that's a really fundamental shift that portends future moves by the Fed to continue to encroach into the retail monetary system and to dominate the monetary system. But that, in a nutshell, is where we've gone. But all that new retail money creation, make no mistake about it, it went to billionaires, period, full stop.
Right. And so you just came out with a new video, which I'll show the image here. And I want to just say one thing about this image, that you got something inaccurate on this image, that Augustin Carstens is not that thin looking. So
well, he got GIMP down. I don't use Photoshop. I use GIMP. And anyway, I did what I could.
Yeah. Well, so this video is important in that you kind of talk about something that's happened within this past year between the wholesale or what would be they would call the public market was the wholesale market. Is that correct? Would that be kind of interchangeable?
Yeah, the markets are described as public and private by certain people when they're writing. For example, BlackRock has authored some papers where they talk about public and private. Public and private simply refer to who is issuing the money in the respective circuit. So the public circuit refers to the Fed. That's also called the wholesale circuit. And the reason the Fed is considered a public institution, at least according to the official story, and the Board of Governors in the Federal Reserve is indeed a public institution. It is not, however, the entity or the arm of the Federal Reserve that issues money. The Board of Governors hasn't ever issued one penny. The issuing banks in the Federal Reserve System are the regional Federal Reserves. There's 12 of them, the biggest one and the dominant one being in New York. They issue the money, they're private. But the official story is the Fed is public. And it derives its money printing authority from the U.S. Constitution, from the U.S. government, from the Federal Reserve Act. So that's, for that reason, considered a public entity, even though it really is not. The private entity in the private circuit refers to the entities in the retail circuit, and that's our circuit. And in our circuit, all of our money in our bank accounts, and to be clear, I'm talking about electronic money. I'm not talking about cash. Cash is physical. We're talking about electronic money. All of the electronic money in the retail circuit is issued by commercial banks in the form of loans. And it took me a while to bite into that concept. And the reason is I haven't taken out a loan in a long time. Um, I've lived poor, but I haven't taken out a loan. And I always thought, well, how could all the money really be sourced in loans? Because I have a bank account, there's money in it, and there's not much money in it, but none of it's borrowed. It's, I got all that money myself. But here's the deal. It came from, I got that money. If you could trace the chain up, if there were a monetary genealogy, and you could trace the electrons in my account back to their source, they came from a loan. So did your money. All of our money in the retail circuit comes from commercial banks. They issue money when they lend. So, for example, you and I lend, we reach into our pocket, we are dispossessed of the money we lend. Commercial banks don't do that. When they lend, they create that money out of thin air. And that's just that. And so that's the source of the money in the retail circuit. And for that reason, it's called private. So private refers to commercial banks, retail circuit. Public refers to Federal Reserve wholesale circuit. Two different circuits.
Two different circuits. But the one circuit still gets their money from the other, right? I mean, it's the base money, the reserve money. They create their own money. The retail banks create the money, but they also but they still have a relationship, right? They have to, because they borrow the money from the Federal Reserve.
Well, so the Fed, when the Fed creates reserves, okay, just as commercial banks create retail bank money when they make loans, the Fed creates reserves when it either lends money to commercial banks or when it buys assets from commercial banks. It creates those reserves out of thin air. So what's the real difference? The real difference is that commercial banks are the one entity in the system, in our monetary system, that straddles the dual circuit system. It is a player in both the wholesale circuit, where it is a user of money, and in the retail circuit, where it is a issuer of money. So if you look at a commercial bank's balance sheet, our bank accounts on the commercial bank's balance sheet show up as liabilities. By contrast, if you look at reserves in a commercial bank, look at their balance sheet, the reserves show up as assets. The reason reserves are needed at all is that two different banks, that money legally, when a bank creates retail money, that's legally an IOU, okay? So you take a $100 bill, you walk into a bank, you open an account, that $100 bill, you no longer own that money, okay? As soon as you deposit that money, you're an unsecured creditor. Okay, so your money in your account that you get, you just traded a $100 bill for an IOU, which is the money in your account. Legally, that money in your account is an IOU. We say, why does that matter? That matters because if you bank at Bank A and I bank at Bank B and you transfer money to me, okay, my bank isn't going to take on your bank's liabilities. Okay, your bank wrote that IOU. My bank's going to be like, why would I honor your IOU? You wrote this IOU, not me. Why am I going to take that? And the answer to that question is that when you transfer money to me, let's say you, Jason, transfer $100 to me, okay, of bank money, and your account goes down by 100 and mine goes up by 100, that's the retail side. There's a parallel wholesale side where the reserves in your bank go down by $100, and mine go up by $100 in my bank to make that transaction balance out. So on your bank, you're now showing minus $100 in retail money and minus $100 in reserves. And over on my side, when I've now received that $100, the retail side is now plus 100 bank money and plus 100 reserves. Reserves are needed to settle retail bank transactions. And that's why the commercial banks occupy a very special place, as a straddling the two circuits in the monetary system. That's generally how that works.
Gotcha. And you have a really good video where you kind of explain this using marbles. I remember you gave kind of a visual. It's an older video.
It's Wherefore Art There Reserves. And at about, 15 or 20 minutes in that video, I have an overhead camera and I walk through the examples of, you walk into a bank with a $100 bill, here are the moves you can make once they set up your account, just to sort of lay it all out. So, I'm a visual guy. None of this makes sense. I can't read it and make sense of it. But if I could see it in marbles, I go like, okay, I got it.
Yeah.
And that's
I
that
mean,
video.
with me, even if I see it, it's still hard because I think I'm not great at math anyways. That never has been my
It's not
strong area. And it's like a shell game. It's like this deliberately confusing setup.
it is deliberately confusing. The problem is not the math, to be blunt. The
Mm,
problem is unlearning what we have been taught. The piggy bank model of money is so ingrained into
right.
our heads that it takes years to unlearn that. Like, what do you mean? A bank doesn't go to a vault and lend the money? It creates the money out of thin air on a two ledger system, huh? It's very alien. And it's not explained for a reason, because the fewer people that know about it, the less likely you are to have a revolution the next day.
Yeah. So as we go along, those of you who are watching, we are going to take some of your questions, and I'll try to get to them. I'm gonna be reading. What happens is people get in discussions, and it's hard for me to like pull out the
Yeah.
questions. So what you could do is, if you do have a question, in all caps, type the word question, and then I'll try to like look at that and ask that as we go along here. And then also, I do want to refer people to John's YouTube channel, which is Best Evidence, and he's got lots of really great visual videos to help us understand what we're talking about here today. So your latest video, the one that I just showed the cover of, I'm going to bring up this other image here from Fred, which collects economic data, and
Yeah.
so these two graphs here represent the wholesale and the retail circuits, money, right?
Yeah.
So the private and the public. And so
Yeah.
so something happened here with these two lines. Like, I don't know if anybody can see my
Can
mouse.
you,
Actually, I'm not really
Jason,
sure. I've got a
is that a
larger.
live image? Can you hit
It's
the
not
little?
live. I just grabbed
Okay.
I'm sorry. I
Okay.
just grabbed a
It's a
screenshot.
screenshot. There you go.
I could grab the video and actually throw it in
That's
here.
that's that's the image you want right there. You got it up now.
Yeah. So,
Okay.
do you want to just real explain what this is real quick?
Yeah. Okay. So that's a 20-year, give or take, graph of the two circuit monetary system, of the amount of money in the respective circuits. The red circuit is ours. That's the bank money circuit. We have most of the money. All of that money was created by commercial banks. The blue line there at the bottom, that's the wholesale monetary supply. So it's a 20-year period. You can see two vertical gray bars. There's a big one and a skinny one. The big one is the 18-month period corresponding to the global financial crisis. The skinny one on the right is the allegedly 2-month-long recession that occasioned the pandemic. And so the takeaway here is there's a break point before and after the pandemic. And before the pandemic, you could track those lines and see that why that light went out. You can see that the red line, the retail monetary supply line, is independent of the blue line. That no matter what the blue line is doing, the red line doesn't really budge. It just kind of does its own thing and trucks along, linearly increasing over time. And for a long time, the blue line is basically zero, and it increases when the Fed begins to use reserves for something other than settling transactions. Remember, I said you need reserves to settle retail bank transactions, and that's certainly true. And that for that reason, the line was very small for a long time. It was flat. It was zero, because you just don't need that much money to settle transactions. You could have $1 billion of transactions, and you might get away with settling those transactions for less than $1 million for sure. But in the global financial crisis, the Fed begins to use reserves not just to settle transactions, but to buy assets, and they pop up. But even though that blue line pops up in the global financial crisis, it really doesn't have an effect on the red line. That independence between those two circuits, however, ceases with the pandemic, and there you could see there's a no doubter there that when the Fed is increasing the blue line, it's injecting new reserves into the wholesale circuit. The retail circuit is responding in kind, and that it's pretty much a match. Now, it looks at the very end there like the blue line is flagging off, and it is. But all that is really is the deposit holder, the banks that are holding the reserves in the Federal Reserve are converting their deposits, which is the line you're looking at, the reserves line. They're converting that money to reverse repos. And they're doing that the Fed is doing that and inducing banks to use the reverse repo market in order to prop up demand for U.S. Treasuries, because the U.S. needs all the help it can get as it goes into deeper and deeper in debt. But that's basically that break point at the pandemic is a big tectonic shift in the monetary system, no doubt about it.
So I'm pull up another image where you actually overlaid these two things, so that you can see. You just kind of brought that up and saw how these things become connected, and like I said, he's got a long hour-long video that actually goes into great detail about this. But for today, I just want to give you folks just kind of a quick overview. But do you want to just real quick say what is the significance of this merging of these two lines here?
Well, the real significance of it is that you could see that blue line is going down for about 18 months before it turns around and start. So now that corresponds to the Fed has started to shed assets from its balance sheet, and it's not creating money. It's effectively destroying money, letting assets roll off its balance sheet. And then it reverses. And that reversal occurs in September of 2019. And that occurs when there's a problem in the New York repo market. JP Morgan began withdrawing its reserves from that market and no longer funding the repo market. And that forced the Federal Reserve in New York to step in and add reserves back to the system. And as soon as it does in September, the retail market responds in kind and starts tracking the wholesale market. And what makes that so interesting is that in October of 2019, there had been a meeting of the Federal Reserve. They hosted an event in Jackson Hole, Wyoming. I think it's going on right now this year, but 2 years ago, they were hosting the Jackson Hole event where all the monetary bigwigs, all the financial bigwigs from around the world come, and they convene, they discuss, financial and monetary policy. And at that 2019 Jackson Hole meeting, BlackRock presents a plan called Going Direct, and they say, hey, Federal Reserve, and hey, central bankers from around the world, there's going to be another downturn. It's coming. And when it comes, you're going to need to find a way to get the public money into the private money circuit. And what happens is that 3 or 4 weeks later, ta-da, there's a downturn, and suddenly, just like BlackRock said, public money is getting into the private money circuit. The blue line is leading the red line now, and the red line's following the blue line. It's quite remarkable how the way that worked out. But that was BlackRock's plan. It was authored by a team of people at BlackRock that included some heavy hitters. The fact that it's even being presented at Jackson Hole means it's an important paper. But in other words, the BlackRock paper completely telegraphs all of the monetary events that occur under the cover of the pandemic.
And BlackRock's a pretty important player here, right? Like they're not just some regular company, right?
Yeah. Okay. So BlackRock, they're an investment manager. They got $12 trillion under assets under management. $12 trillion is a lot of scratch. I mean, the U.S. GDP is 2021, whatever it is. BlackRock's, it's bigger than most countries. It's bigger than the vast majority of countries. But not only that, when the pandemic happens and the Fed says, you know what, we need to print up all this money and inject all this money into the wholesale circuit, they print up like $3.5 trillion. Who do they call in to the Fed when the Federal Reserve does this? He's like, we need some help buying all these bonds. We'll call BlackRock in, and BlackRock comes into the Fed, and and BlackRock helps the Fed. They're like a helper, and they help the Fed choose which assets to buy on this buying spree. So the Fed's printing money out of thin air. It's buying up new assets. And BlackRock, the Fed signs a waiver that allows BlackRock to use Fed money, newly printed Fed money, as part of quantitative easing, as part of the pandemic, to buy up BlackRock's own assets. So BlackRock is the, is the seller and the buyer of the assets. Isn't that great? You know, they're just mopping up during the pandemic. I mean, it's disgusting. It's just like fascism in your face.
Well,
You know,
we have
it's like
this.
James Cagney with a grapefruit and Public Enemy. Just like you don't like it, here you go. Here's a grapefruit in your face.
Well, it's interesting because there's this idea about, free and fair markets and competition and all this other nonsense. Like, where is the outrage? How come nobody's like going, hey, wait a minute, what's going on here? Why are we letting this one company like basically take charge of the most powerful thing, arguably, I don't even know it's arguably at this point, but you know what I mean? Like, why aren't more?
You're telling me? I guess they're too busy justifying the lockdowns. Those people who would normally be writing about this stuff aren't. That's very odd. Why is a patent litigator writing about it?
Yeah,
and very few other people that I don't know of any.
Yeah, and so. It also is just like people are getting paid, so everyone's, they've got schemas set up to make sure that people are getting paid along the way as they transition into whatever they're transitioning into, right?
Who do you have in mind getting paid? I don't know.
Everyone, like, I don't know, just you would think there would be, someone somewhere journalistically or even on or even investors saying, hey, wait a minute, like maybe it's not a good idea to have one company have that much power. It doesn't even seem like it's good for competition, even if you believe in the system, right?
Well, yeah, but the whole notion of competition is kind of a joke because the whole money system divides between two classes of people. There's those people who can print money out of thin air and lend it out, and then there's everybody else who's got to borrow that money. So that the very monetary, the root of the monetary system is just completely flouts the rule of law, creates two classes of people. But yet we pretend in economics profession, everybody pretends that it's this level playing field, everybody's the same. It's like, well, how is it the same when a commercial bank can print money out of thin air and buy an entire business?
Yeah,
doesn't sound like a level playing field to me. The whole thing's a myth. The whole notion of a level playing field is an absolute myth. It's not. But nobody wants to acknowledge that because then we would have to own up to the fact that there are two classes of people: the money printers and the money borrowers. And we can't do that. We can't. Let's be honest, is out the window.
Well, my entry into this was, I was showing documentary films and trying to educate people about various issues, everything from environmental issues to I've been very much anti-war, so I was trying to understand, okay, what is it that's causing, all these wars to happen, these brutal things, and even historically. And once I started to learn about the monetary system, I realized that everything is downstream from that. Like nothing happens before money is created, or credit is created for that thing to happen. And so I'm going around, to people that I thought were environmentalists or I thought cared about poverty or war or whatever, and I'm like, hey, by the way, you can't solve this problem without dealing with this. And they like nobody wanted to learn about it. Like it's almost like it's like oh, this is too complicated or too boring or whatever. And yet they spend all this money donating to different nonprofits and different causes, and they volunteer their time. And I'm like, even these arguments, these political arguments between the Democrats and Republicans or whatever about taxation, like taxation, they have the power to create money, like so.
Right. Well, I mean, yeah, people, they prefer to spend their lives tilting at windmills because at least you get to hit the windmill. Right? I mean, it feels good. It's emotionally satisfying. But it doesn't change anything.
Right.
For the reason you say, when you can just have a war, wars are great for the banks because they can print out money out of thin air and finance entire armies. That's out of nothing. All those things. The great wars started only after the world wars start, only after the Federal Reserve was created in 1913, and pretty much immediately. But you're right. It is kind of, it's complicated in a way, but in another way it's not. And it's not taught. And the thing that really sort of put the hook in me in my own monetary education was reading Alexander Del Mar saying, there was really the thing that really, the point of no return with the American Revolution really wasn't Lexington and Concord. That was kind of like a street fight, in the scheme of things. What really did it was the colonists printing money. Because they were laboring under this debt-based monetary system from the Bank of England. All of the money, all of the gold and silver was flowing out of the colonies into England. It was created a depression in the colonies, and they just had enough. And they started to innovate, and they started to innovate by basically printing money out of thin air. They started printing notes out of thin air. But the key thing is, it was real money. It wasn't this debt-based. It was notes that you could spend, and it was, the notes could be redeemed. You could spend it on, they were using their own notes to pay armies, and you could pay taxes and duties and fees with it. So it was officially recognized money, and it caught like wildfire. And Ben Franklin said in his autobiography, well, the reason for the great economic success of the colonies is scrip. We have our own money. And Del Mar says in the history of money in America, he says that was really the problem. He says, the king had come out and said, "Thou shalt not print money." And the colonies were doing it anyway. And he says, once they got together in the Continental Congress and came together, a group of colonies came together basically as a nation without really signing any documents, but they functioned as a nation and they printed their own money, coming together that way. That was a stick in the eye of the king. And he says at that point, the lines in the sand are drawn and there's no going back. You got a stick in your eye, George. You better pull it out. That was their side, and our side was no. We don't even. The colonists didn't really want to break from England, but they were even less willing to give up their own currency. They weren't going to have a depression just because some banker in London wanted to maintain his monopoly power over the money supply. The colonists weren't going to have it, and thus began the revolution. Right. And that to me was the fundamental thing. It's like, well, I thought that fiat money was bad. And it's like, well, that's just another old wives' tale that's fed to you along the way. There's all these myths that are fed to you along the way that just happen to correspond to people's political beliefs. So you have a bunch of people on the right, so-called libertarians, like fiat money bad, bad, tilting at their windmills. And then on the left, you have modern monetary theory teaching people that the Fed and the federal government are one and the same, when they're not. That's absolutely ludicrous. Right. But MMT will not back off that proposition. And so it feeds the political divisions in the country perfectly, and nothing ever changes. And that's as the powers that be want it to be.
Well, I think the question of what is money, and like most people think of it as like a natural resource or something. Like it's a, right. Like, oh, I go to work and then like the money, right. As far as I'm concerned, the money was created from the work that I did. And that's not the case, is it?
Well, it's not.
It got into your hands.
Aristotle kind of, he had the Titus formulation. He says, money exists not by nature, but by law. In other words, money is an instrument of the state. And if you look at our own Constitution, you'll see in Article 1, the right to coin money is given to Congress. That's why it's in Article 1. So it really is a creature of the state. All the markets and stuff, they all depend on laws. In the smooth functioning of the market, they all depend on law. Money is a creature of law. Now, that said, you're not going to get very far using your legal power to create money if people are not working. You're going to have an inflated currency that isn't worth very, very much. Right. Ultimately, at the end of the day, you really do need, labor plus capital to produce something new, to sort of prop up and sort of give the, sort of a force or an oomph to your money. You can just not be just simply an empty currency with, little kids playing Monopoly in a living room. That's not going to work. You actually need a real economy. But you're exactly right. It is completely a creature of law. And in fact, if you read legal treatises on money, you will find that formally the debt-based money really isn't money. I mean, the Federal Reserve notes are legal tender, but after that, it drops off quick. The bank money actually isn't money. It's considered money. It's not, as a matter of law, it's not really money. It's money because people consent to accepting it as money. They accept it as money, but without their acceptance, it's not money. It's simply debt. Yeah.
Yeah, and then well, in terms of you need a real economy or something to create it, I think that's changing and has been changing for quite a while, because they've been getting really creative in how to create these fictional products, financial products, which it seems like are moving us away from the real goods and services, world. But even more so than that right now, it seems like this whole move into this idea of digital assets, I think, is going to be a huge game changer, because you can have, like, think about people buying and selling things that aren't really real, like people are buying digital assets. And I think, there is no limit to the number of digital assets, right? They talk about the limits of the natural world or whatever, to how many goods and services do people need, or can we create. But with creating the virtualization of life, I think changes a lot of that. And I want to go into too, I've got some clips lined up from a recent video that was put out by the Bank of International Settlements, kind of going into this what's called the CBDCs, which is the central bank digital currency. And I know you've done some research on that.
Let me say, though, about digital assets, that's been going on for a long time. People buying digital assets. I mean, the most notorious example during the global financial crisis, to my mind, is just credit default swaps, which is just insurance policies on other people's stuff. That's the classic example of a digital asset, where it's like, wow, somebody else's credit default swap is basically you take out an insurance policy on my mortgage. In other words, you could make a bet that I'm not going to pay my mortgage. It's not me in particular. It's actually 5,000 mortgages bundled together, or whatever it is. But it's an insurance policy where if the bundle of 5,000 mortgages doesn't pay off and it defaults, you get paid. And it's not limited. That's a complete violation of the insurable interest rule, which is why it's not called insurance. It's called a credit default swap. But there's no limit to how many people can take out CDS on mortgages, and that creates a huge problem. Just for the very reasons that the insurable interest rule exists. It used to be you couldn't take out insurance on someone else's stuff. It was illegal. And the reason it was illegal is that people were taking out insurance policies on, for example, boats that they didn't own with a valuable cargo on it. And, what would happen when you would take out $1 million policy on someone else's, transport ship? Magically the ship would, burn at sea, it'd sink. And then the person who bought the insurance policy would collect. And, eventually courts in England wised up and they're like, wait a minute, something's a little fishy here. From now on, we're going to just invent the insurable interest rule. You can't take out insurance policies and have them enforced on articles of commerce that you do not own yourself. And so the way they figured a way around that in 1999 or 2000 through the Commodities Futures Modernization Act was simply to rename it. They didn't call it insurance. They called it credit default swap. And away we went. But that has gone into hyperspace since. The digitization of assets, it's just gone completely berserk. It's not going to end well, but away we go.
Yeah, well, the other piece of it too is, and I don't know how much you've gone into this, but the whole concept of impact investing, where they're basically, you have private investors that what would normally be like public services or it could be nonprofit work of where they create these metrics, and then once the metrics are met, then a payout is made, and there's whole new markets that are being created built around impact investing, and I think that's going to actually tie in with a lot of this stuff that's going on particularly with the cryptocurrencies and the blockchain currencies, and the Bank of International Settlements advocating the central bank digital currency. And
that's a little bit different. The CBDCs, I'll get to that in a minute, but just to tie up one more point, the digitization of assets and these things, you're basically two economies. There's a real economy where people provide real goods and services. I mean, you take capital on the one hand, money on the other hand, labor on the other hand, you put it together, come out with a product or a service that adds value to the system. What you're talking about with human impact bonds, or I'm talking about credit default swaps, that's all the casinoization of the economy. You've created because it's easier to make money in a casino, right?
Yeah.
It's faster, it's cleaner, it's cheaper, but there's no value added to that. It's a zero-sum game. Unlike the creation of manufacture something, you take $2 of materials and $2 of labor and you produce a $30 bicycle. I mean, that's adding value. The casino economy doesn't do that. It extracts money from one class and gives it to the other. Goldman Sachs got in trouble selling an investment called what's it called? Timberwolf. I'll think of the name. I'll think of the name in a minute. It was called Hudson 2, where it was basically an investment that they sold to their own clients, and their clients lost $1.7 billion, and Goldman made $1.7 billion. That's a casino investment. It's a zero-sum game. That's a tell. The sharks are going to win, and the minnows are going to lose in that game, and we're the minnows. And that is getting what you're talking about with human social impact bonds and all the rest. That's just adding colors to the casino, right? And it's just going to exacerbate the massive inequality that we're seeing already. Really got accelerated during the pandemic. You're exactly right. That's coming big time.
When also, but it seems like that casino is overtaking the real goods and services economy. I mean, it's almost like
yes.
the real world is becoming less and less relevant.
It's becoming more and more enslaved.
Right.
Is the way to look at that. It's getting crushed down in the dirt. It's basically we're moving to an enslavement economy. To be blunt. And that's very much in line with what CBDC is. CBDC isn't money at all. Augustin Carson's the head of the Bank for International Settlements, the BIS, said in a symposium back in October of 2020. He says, it's the problem with the $100 bill is, we don't know who's spending the money. We don't know what they're using it on. He says, but digital cash with CBDCs, we know exactly where it is. We know what we're spending it on, and we can deny the transaction. In other words, they can cut your money off. It's not money at all. If you can't spend it, it's not money.
Yeah,
it's just a control.
Of course. So on that, I've queued up a whole bunch of clips here, and they're short. They're a few minutes long to some are even shorter. So I thought I would just go through these clips because I just thought it was a really enlightening video, and I think there's a lot of we can show the clip and then have a little discussion in between, and it might be a good launching point because I think the relevance of CBDCs, even though you're right, it's not real money, but it's what is real money in this world, but it is going to have a massive impact on our lives, and anyway, so. Let me, I'll just queue up the first clip and hopefully it will just start playing.
CBDCs offer in digital form the unique advantages of central bank money by ensuring the finality of payments, providing liquidity, and ensuring that central bank money is neutral in the sense that it is provided on an equal basis to all commercial parties with the commitment to competitive fairness. Retail CBDCs build on the conventional two-tier monetary system and make central bank money available to the general public, just as cash is a direct claim on the central bank. CBDCs would also serve as a salient marker of the trust in sound money available to the general public, just as cash is today. Most of the operational tasks and consumer-facing activities should be taken on by commercial banks and other payment service providers.
Okay, so hopefully the volumes, I might have to adjust the volume on these other ones.
I heard it fine. The volume's good.
Okay, great. So do you want to just say something about that real quick, just like kind of intro to CBDCs?
Yeah. Okay, so that's the Bank for International Settlements, the BIS, and what you just heard there is a salesman with a pitch for CBDC. Central bankers always have a pitch for their product, and this time the product is a central bank digital currency. And it's being trotted out as a way to solve inequality and cure the problem, the alleged problem of the unbanked, meaning people who don't have electronic bank accounts. And you heard him say, it's money for all. In other words, he's sort of backing into the notion of universal basic income. It isn't as good he does have one really good point, which is that that money, the CBDC, because it is coming really directly from the source, it's coming from the Federal Reserve, and I'm just going to use the U.S. example. The CBDC in the U.S. would be coming from the Federal Reserve. The Federal Reserve, unlike commercial banks, cannot be bankrupted. Okay, in other words, you cannot. The Fed can print as much money as it wants without any, let's call it, legal consequence. There may be a societal consequence. They print too much, you get hyperinflation or whatever, but there's not going to be a legal consequence. Nobody could come in, say, for example, in 1970, when we had a gold standard, nobody could come in and say, hey, you know what? I've got $35 here. I want to redeem this for an ounce of gold. That's out the window. Now, all the money the Fed issues, whether it's cash or reserves, can only be redeemed in other things that the Fed can freely make. It's not like a Coke claim check where you take a claim check to a restaurant window and say, hey, I want my mink back. That the restaurant has a problem with that because it doesn't make minks. You got to produce the coat. The Fed, by contrast, when faced with a claim on it, the claim being either cash or reserves, if you go to the Fed window now and say, hey, I've got $100, I want to redeem this, you're going to get 5 20s back. But the Fed makes the 20s too. So the Fed can't be bankrupted. And so for that reason, what that guy's saying is it's a more reliable currency or a more trusted currency. That's kind of right, because people do tend to trust. They have sort of an intuitive feel for money coming from the source, and they like it better. Commercial banks can be bankrupted. Yeah, they can print money out of thin air when they make loans. The problem is, when you go to the bank and say, hey, I've got $1,000 in my account, give me $1,000 in cash, the bank's got to cough that money up. Or when you go to the bank and you say, hey, I've got $1,000, I want you to transfer it to Jason, and the bank's got to transfer $1,000 in reserves per that earlier example I gave you. The banks can very much be bankrupted or put into resolution or otherwise gotten into trouble. The Fed can't. And so when that guy's saying it's going to be a more trusted currency, he's right. He's just not telling you why they're doing it. They're doing it, A, for control, and they're doing it because, B, the banks have really run out of runway, and big banks are no longer making loans in an amount or at a rate sufficient to support the economy. And that's just the bottom line. And so now they've got to sort of come up with another system, and that system is ultimately going to be CBDC. But that's a sales job. That's a sales pitch that you just saw. Notice in his diagram he had the commercial banks in the middle of that diagram down below, and he even said the commercial banks are still going to be here, and he's right about that. But that just means we can't kill them off all at once.
Well, I don't know if they would ever want to completely kill them off, because it seems like very few people would actually support the overt, just one bank ruling the whole thing, right? I mean, it just seems like they need to have the facade, just like a lot of corporate, companies. You have like, different corporations. You go to different restaurants and they're actually owned by the same corporation. So it's a monopoly in reality, but it gives the appearance of having some sort of competition. So I think they want to keep up appearances, right? I mean, what do you think about that?
Well, the banks, the Fed's the boss, okay? The Fed could come out with a CBDC and they could say, you know what, we're paying 5% on our CBDC. How many banks do you think could match that at their deposits? Not many that I know of. They'd be out of business overnight. The Fed has the banks over a barrel for the reasons I gave you. But here's what they want to do. They want to, and banks are going to be in trouble under the CBD system. They're going to be forced to find other ways to make money, because loans aren't really doing it for banks. And so they're going to have to sort of reformulate their existence banks and become, and in fact, that very paper that guy's talking about, where that diagram came from, I read that paper, and he calls the intermediaries there in that diagram, they're called PSPs, payment service providers. And that's significant language, because what that means is you don't have to be a commercial bank to be an intermediary in the CBD system, right? You could be Amazon, you could be Google, you could be Tesla. Anybody could be a financial intermediary. You don't need to be a commercial bank, because you don't need money printing power, right? And so the game is going to shift to the CBD system, to my way of thinking, is going to force banks and force those intermediaries into a system of monetizing the data they have from their retail base, from their customers. And I think that's where we're headed. And he's not going to talk about any of that.
Right. So this next clip actually kind of goes into, they like kind of downplay a little bit, like, well, cash isn't really a big, it's such a small piece of everything. So, but I want to get your thoughts on this next little clip.
Cash is typically a very small fraction of bank deposits, cash here in pink. This reflects the fact that cash is not widely used as a store of value. In the same way, CBDCs can be designed to retain a small footprint in the financial system, just as cash does today. Central bank money can then preserve its core attribute of neutrality. So,
apparently,
that guy's a funny guy.
Yeah. Well, actually, I want to address that idea of are banks neutral? Is money neutral? No. I remember years ago reading a quote by well, it's in one of my books back here. Bernard Lietaer, made this statement that money is not value neutral. Like the way that it's designed actually already has values built into it. So, and then the banks, are the banks neutral, John?
Well, let me go back to that guy. Let's just start with the graph. Okay, I don't know where that guy got that graph, but it ain't from the Fed, because I looked at. You can just go to the Fed Reserve, go to the St. Louis Fred website, which has a repository of like 700,000. That graph is not total nonsense. That's complete nonsense. Total. Okay, all you need to do to refute that graph is go to Fred, St. Louis Fed, and look up currency and circulation, and you can see the currency in circulation in the U.S. is well over $2 trillion. In fact, it exploded upward during the pandemic. It's like, well, why do I thought people weren't going out during the pandemic. I thought there were lockdowns. Why is cash exploding through the roof? It's now over $2 trillion. So if you're telling me if cash is $2 trillion and it's in pink in that graph or in red, what in the Sam Hill is the blue number? Because we just looked at the retail bank circuit, right? The red line versus the blue line. I showed you that graph.
Yeah.
Okay. The red line was sitting at 18 trillion. So maybe retail bank money, the volume is, let's call it 9-2 or 9-1. Okay. Okay. So that's about 18 trillion there. And then the currency in circulation, which would be cash, that's 2 trillion. So 18 divided by 2, that's 9-1. The graph he's showing makes it look like it's like 100-1. Because he's just wrong about that off the bat. But what he's got to explain to me is why currency in circulation is just busting off the chart throughout the pandemic, and why the Fed is printing cash. If they don't like cash so much, why are you printing it hand over fist during the lockdowns? So there's something wrong with that whole presentation. Yeah. But as far as money being neutral, it's not neutral because it's the only people in the U.S. who can print money. There's 12 entities that can print wholesale money, and that corresponds. That's a New York Fed, San Francisco Fed, Chicago Fed, Dallas Fed, and so on. 12 regional Federal Reserve circuits, they can print wholesale money. And then in the retail circuit, you have 4,357 commercial banks in the U.S. If you doubt me about that, go check the last FDIC statistics at a glance report. It's a quarterly report. They come out, they identify 4,357 commercial banks. They can create money out of thin air when they lend. Okay, but those are, how many bank presidents are we talking about? 4,000 or so. And a lot of those banks, like you say, they're owned by the same people that own the Fed. It's not neutral at all. The money printing power exists in the hands of a few thousand people, all of whom are unelected. So money neutral, that's a total and complete myth. They print money to help out their cronies. In other words, if you start printing, if you start have a successful business, then there's a couple ways to get you. One would be the money printers just come up, they print up money, they lend it to somebody, and they start, a rival business in your neck of the woods. Another way is they get you sucked into the stock market. There's a lot of ways to get people in trouble. Alfred Crozier talks about the ways that the dirty pool that bankers shoot against Main Street businesses in a book called Corporate Currency versus U.S. currency, written in 1912, right before the Federal Reserve it was enacted. That book is dynamite. But there's any number of ways that banks can take on Main Street and beat Main Street to a pulp with their money printing powers. Crozier is very clear about that. And so the notion that it's a neutral system is just an absolute myth. It's a total lie that's perpetrated and it's perpetuated by central bankers and by bankers generally. It's ridiculous.
Right. So I do want to take a couple questions here. And if you do have a question, I'm trying to follow. I haven't been reading all the thread here because I'm trying to pay attention over here, but I'm trying to pull out the questions. So if you could put it in all caps and start with the word question, and that way I'll be able to pull it out really easily. I'm actually going to ask a question myself, even I'm the host. That's cheating, I know. But I know that people say, like, in terms of the solution, I hear people say, well, let's just do, I've heard people say, like, and someone mentioned this in the thread, I did see that, like, oh, let's just everybody, like, just start using cash, or everybody just pull your money out of the big banks and put it into this local banks and put it into credit unions. Now, I'm not saying that's a bad thing and that we shouldn't do that, but to me, and maybe you can correct me, it seems like it's such a drop in the bucket compared to what we're up against. I mean, how far can that actually go in actually making a real difference in dealing with this? Because it seems to me like at the end of the day, they're still in control of all of that. They're still, well, they're going to probably get rid of cash, but in the interim, like, so they can't track you're buying Fritos or whatever. Who cares? Like, at the end of the day, like, we need to actually organize and figure out some way to stop this from happening or take back.
Yeah, okay, well, here are your choices. You can revolt. Okay,
Yeah.
That's one way out of the system. You have a system run by criminals, right? They've got money printing power. They absolutely, we know from early 2013 that the Justice Department isn't going to prosecute any too big to fail banks. They're not only too big to fail, they're too big to jail. We know this beyond a shadow of a doubt. Martin Smith walked into Lanny Brewer's office, assistant AG, and said, our sources tell us that when it comes to Wall Street, there are no subpoenas issued, no document, there's no wiretaps, no document reviews, no investigations going on at all. And Brewer admits it. So they're not only not being prosecuted, they're not being investigated. Criminals are running the system. There is one way out of that system. It's not voting. It's not doing anything. It's not rallying or picketing. It's called revolution. Okay? If you don't like that, you want to stay within the confines of the system, and I get it, because revolution is a young man's game, and that's what the colonists had to do, because look what happened. They didn't accept the monetary powers that be. What do they end up doing? They printed their own money, and they revolted. That's what it causes. So you want out, that's out. You're not voting your way out. Okay, yeah. You forget that. That's a childish. You had to 8 years old to believe that notion. It's ridiculous.
It is kind of.
Believe you're going to vote your way out of a criminal system.
Right.
But if you don't, if you're not ready to take that step yet, and I get it, then do exactly that. Spend cash, put it in credit unions. Credit unions don't create money out of thin air, and force their feet to the fire, and don't let them know where your money is, and spend cash. Yeah, for the reasons that Carson's advocates against cash, you should be in favor of cash because they can't track it. Use as much cash as you can. And by the way, I don't think cash is going away. That currency and circulation craft, that is an eye opener. Take a look at it sometime. It just does, like, what is going on? I don't understand it, but it's there. It's like you look at the Federal Reserve balance sheet. Just go to Google, say H.4.1 report, come right up, click it, look at it, and go look at currency and circulation, and you can see it's way over $2 trillion. And the whole balance sheet is $8 trillion. So cash is, it's a quarter of the Fed's balance sheet. Cash. So I'm in favor of spending cash. I think that's a good move because otherwise your alternatives are limited.
Yeah. Well, and I wasn't saying that we shouldn't do that. My point is that's going to be very limited on what that actually does. I mean, it'll
put the brakes on
some stuff.
It puts the brakes on to a what's looking like a rapid descent into totalitarianism. And okay, so I'll take the brakes. Yeah. Okay. If we're going to go, I mean, and we're sliding that way, and we're definitely sliding that way, I want brakes. I just don't see a revolution in the cards. So you got to fight tooth and nail.
Um, yeah, so there's a couple things I could spin off there, but let me. This question we might want to save till later. Someone's asked, how do commercial banks create money? That's kind of a longer answer. I don't know if we want to really go. Do you want to say something to that
Yeah,
real quickly?
there's a
But shortly,
you
because
wanna,
there's a lot I want to
yeah.
cover here.
There's a professor by a guy named Professor Richard Werner, Werner, called "Can Banks Individually Create Money?" It's written in 2014. It's published in Science Direct. It's actually linked in the description box of my latest video. That video is called "Larry and Carson's Excellent Pandemic." You can click on that link and read that paper. That's banks. The short answer to that question is they have software so that when you come in and sign loan papers for $1,000, they add $1,000 to their asset side, and they add $1,000 to their liability side. The $1,000 addition to the liability side of their balance sheet, that's your bank account that gets created in connection with the new loan. That's how.
Gotcha. Then someone asked, what effect or consequence did the repeal of the Glass-Steagall have on the balance sheet shell game?
Very, very little, to my way of thinking. That's one of those, like, it's a hobgoblin. I mean, yeah, Glass-Steagall, it's one of those things like, yeah, it applies the brakes, but you can't stop a bank from lending money, from creating money to lend to somebody who's going to invest it in the casino. I just think that's an overblown issue, personally. It's sort of, to me, that issue is along the lines of fractional reserve. Like, oh, well, the reserve ratio is 10-1. It's like, that doesn't really mean anything, you know?
Gotcha.
I've never seen that explained to my satisfaction. Like, why Glass-Steagall? People rail about it and they make a lot of noise about it. I've never seen anybody sort of parse through it logically, step by step, like with the marbles examples, and explain to me why Glass-Steagall is so important. It's not any better or worse than the system that would exist with or without Glass-Steagall. Now, the original Glass-Steagall included provisions back in the 30s that was different, but the modern version, that's a tilting at windmills issue.
What's your thought of Nomi Prin's work?
Yeah. The best thing she ever wrote was it takes a pillage. Nomi Prinz is like a lot of people. I think she reminds me of somebody like Michael Moore. They rail and rail and rail, but they're going to end up leaving you in a parking lot, meaning they cover a lot of good ground and they do a lot of valuable research, and there's a lot of gold nuggets in their work, but their conclusions are not. They don't necessarily. They leave the best parts in their work. So I use people like Nomi Prinz and Michael Moore and a number of others. I mine their work for the data, but I'll come to my own conclusions. Thank you very much.
Yeah, and it's almost like, and you see this in a lot of areas, of study where they bring you right up to a certain point, and then they gate you off or something. Like
they drop
I like the drop you in the parking lot's a perfect analogy.
There's a movie called Runaway Train, and the guys escape from prison in Alaska, and they're like, yeah, we got out. They go to run to a train yard, and they're trying to pick which train, and the younger guy's like, let's get this one. The other one's like, I don't want to take us any train. The guy's like, why not? He goes, because I don't want to leave it. I don't want the train to leave us somewhere in a parking lot. I don't want to take a train to a parking lot, and that's what I feel like with a lot of authors. Like, you do good research, but you took me to a parking lot.
Yeah. Yeah, I kind of feel like that a little bit about Chomsky too, because a lot of people have followed his work, but he doesn't take you there. But but I've also on the same boat. I've learned so much from him.
Exactly.
So I would argue with people that didn't like him. I'm like, well, you're foolish not to actually read him.
Yes.
But don't let him be your primary source.
I interviewed him for my movie Bailout. I was in it.
Oh, really?
Yeah.
Nice. Yeah. So someone asked a question, is there a way to describe this historic, unprecedented situation from a philosophical / spiritual perspective for ordinary people to understand?
That's a great question. Let me answer it this way. I think that we are getting ready to enter like 1,000-year, basically a millennium of dark ages. That's my own view of what we're headed into. And for that reason, I think spirituality is more important than ever. And I think seeking answers within yourself is more important than ever. And assets in the external world are less important than ever. In other words, the investment that I would advise people to make now with themselves, invest in yourself, invest in your skills, believe in yourself, because we're going into a period where you're going to need to trust yourself and you're going to need to know yourself more than ever. We're entering a dark time. And I think that people who are spiritually fit have a better chance of doing well and surviving.
I agree, and I don't have a specific religion that I follow. I don't have any container, but I feel very spiritual, but I don't even like that word spiritual because I don't even know really what that means. But I do feel like that there's something bigger, and for me, it's like there's all this overwhelming stuff that like I feel like I have no control over. Like, I can like go talk about it or whatever. I can try to like talk to people about it, but it does feel overwhelming. But I also have noticed something happen with me in this past year of like year and a half. It's like I've been really angry, like just furious at what's going on, and I'm
Yeah.
like I need to work on that because I don't want to, I don't want to be in life like hating people, even though like I'm just mortified that people are not, awake and like conscious and actually critical and even caring about like people that are harmed from.
Yeah. You got it. That's spirituality though, Jason. I mean, from my point of view, you got to let that go.
Yeah.
That's what I mean. For me, my YouTube channel, and not even really the YouTube channel, just the process of making videos. I found this. I was so angry during the bailouts of 2008. I poisoned myself in a lot of ways, and the anger was a major part of that poison. And I realized, I gotta. This is. I'm doing things that the powers that be want me to do.
Hmm.
I'm engaging in self-destructive behavior, and that's not good. And so, by finding a creative outlet, which in my case was video production, even though I knew nothing about it, it became video production. I found a wonderful outlet, and at the end of the day, I'm not angry at people. All I can do is do my best to lay out what's going on, and that's it. People can either they can take it or they can leave it, but I can look myself in the eye in the mirror and say, you know what, I did everything I could do. I did everything in my power to sort of show people the way and to change the system that I have such a disagreement with, and that I don't want to say hatred for, but it brings up and dredges up a lot of negative emotions.
Yeah.
But I can't let that get to me. I can only do my best, and I can only control myself.
Yeah.
And so my own outlet is like I say, it's making videos, and I do some writing too, but mostly videos. I try to really lay it out and really explain it to people, and that's my own form of expression. And I try to let the rest go because it'll eat you alive. It did me.
Yeah, and that's where I'm at too. I'm like, I don't have control over that, but I have control over who I am and how
Yeah.
I interact with people
Right.
and what I offer. And I'm a big believer of like, Martin Luther King talking about, you can't fight hate with hate. You can't fight, you can't fight the darkness with more darkness. You need to fight it with light.
Right.
And even the
Right.
word fight, I don't even know, I'm probably misquoting him anyways, but the idea of like how we respond to this, and it is a personal internal thing. And I think that's one thing that we all have control over is how we interact with one another and with ourselves and with other life on the planet. So anyways, that was a good question. Thank you for
Yeah, it's a great question.
by the way, if you want to ask a question, please again write the word question and have the whole thing in caps. That way I can, because I'm not reading this whole thread right now. So let's I want to go through some more of these BIS or these BS videos. Oh, BIS videos. So let's just go through a few more of these.
An essential byproduct of the digital economy is the huge volume of personal data that is collected and processed as an input into business activity. Data and their network effects present several related challenges for central banks. The first is that network effects make the payment system prone to concentration and enable the formation of data silos that entrench the market power of firms that have exclusive use of the data. The second is privacy and data governance. Data concentration not only has a detrimental economic impact, but it gives rise to concerns about data privacy and data governance more broadly. Both the competition and data governance imperatives need to be met while ensuring the third imperative, that of ensuring the integrity of the payment system against money laundering, ransomware attacks, and other illicit activities.
So, getting into data, we hear that term data is the new oil, but we need to keep it integral. And what do you have any thoughts real quick on that clip? If not, I can move on.
I gotta laugh. It's central bankers expressing concern about privacy. Let me back up and tell you where I think that's coming from, the concern about privacy. I think that there's a bit of tension in how CBDC will be implemented across the globe. And I picked up on this at a symposium that was hosted by the IMF in October of 2020, in which Augustin Carstens was really gung-ho, almost a fever pitch in favor of central bank digital currency. And Jerome Powell, the chairman of the U.S. Federal Reserve, also participated. And you could see Powell, this guy cut his teeth at a law firm called Davis Polk. It's a white shoe Wall Street firm, very, very old, very venerable. I mean, Powell's a conservative guy, okay? And you could just almost see him like, whoa, Carstens, you were just way too excited about all this stuff we could do with CBDC. And so Powell's like at the symposium, we can't just rush headlong into CBDC. We've got to worry about a lot of things. And he mentions privacy in particular. And I think that's in large part where this is coming from, because the Fed, the Fed is the world's largest PR organization. And they are perceived, rightly or wrongly, as being part of the government. So they got to watch themselves with privacy, because in the end, I mean, legally, Congress does have power over the Fed. Congress could, shut the Fed. It created the Fed. It can shut the Fed down legally. So the Fed's got to be careful and at least pay lip service to privacy. And I think that's, the other central banks are coming around to Powell's point of view. Like, we need to put privacy out there. It's like we need to not let that get out of our hands. And maybe we should be outsourcing that functionality to payment service providers. And I think that gives the central bankers a great out too, because it's like, well, we didn't know that, Uncle Larry Fink over at BlackRock was going to harvest all your data and sell it down the river the way he did, So I think that's kind of where that's coming from. But make no mistake about it, the sharks swimming in the water are planning to profit big time off of their harvesting of your very, very private data. That's my read on that.
Yeah, and the whole idea that your data is gonna be private, I think, is just
it's ludicrous.
It's laughable.
Okay, so let me tell you why.
Yeah.
Either you want privacy, then adopt CBDC with tokens. Use a token system like Bitcoin, where I hold one half of the public key, and it's done with a key system, right? And so in other words, with the token system, it's like cash in that the cash validates itself. You can kind of feel the cash, right? It's real. It's got color on both sides. Everybody knows what cash is. The cash validates itself. And so there's a digital equivalent of that, and that's the token system, where you could have a token-based, digital currency system. But they don't want that. They want the account-based system, like electronic money, where you need a PIN or something to validate it that way. You're validating your existence in your account. And that's so they could go with that. The other way that privacy is a totally fake concern is that Wells Fargo got busted creating, millions of accounts in people's names. The people banking at Wells Fargo didn't even know that Wells Fargo is out there setting up accounts in their name, buying God only knows what, routing money through those accounts, doing what? Wells Fargo, did you ever see anybody go to jail for that? Of course not. The Fed basically didn't lift, they fined Wells Fargo, but the Fed didn't really lift a finger. If the Fed really cared about privacy, it would have nailed Wells Fargo to the wall. Fed looked the other way.
Yeah. And I'll also real quick just mention about the Bitcoin and the token based thing is I've done several interviews actually with Joseph Gonzalez, he's a former game developer, but he's also done a lot with different cryptos, including Bitcoin, and he's also brought out the point that even those are no longer they're not the way that they were when they were initially started in terms of anonymous token, because you have these intermediaries who are now holding the keys, and I'm doing another show coming up about some of the fraud around that, because even the idea around cryptos being able to save us from this is not that's just not going to happen, and they're actually going to be integrated into the system, I think. And there's actually there's some stuff in this video here that actually alludes to that subtly, but anyway. Okay, so let's go to another one.
Technological innovation in payments can quickly lead to the emergence of data silos and walled gardens, depending on the underlying economic structure and data governance arrangements. Now, walled gardens are very nice on the inside, but it can be difficult to escape once inside. And the emergence of such separate walled gardens lead to data concentration and hinders competition. Instead, the public interest imperative argues for an open marketplace. Data governance frameworks can grant ownership of data to users, and these can be combined with technical standards such as application programming interfaces, or APIs, that impose a common format for data exchange between service providers.
So he's leading in here to the idea that, well, you're going to own your own data. We keep hearing that. You're going to own your own data. And it's going to be, and there's another clip there I've coming up here where they kind of explain the 3 different models, but they've already decided on a model. And we can see which one, you guys can figure out which one they're going to pick from the video. But, that idea, like, I don't want to own my own data. I don't want my data collected, like, where's my choice? Like, I don't want data collected on me. Like, is there an option for that somewhere on there? Like, the idea of you're going to own your own data is ridiculous. You can't control data. There's no, even if you wanted to, you can't control data.
Well, the whole notion of digital money implies a distributed ledger, in that you have to have 2 copies of the system at any one time, right? In other words, you can't just trust your bank. So you have to have your own transactions on your phone, and then you have, a parallel or a mirror image copy at the bank, and that invokes the whole concept of reconciliation between the 2 different copies. But the notion that you're going to have exclusive access to your own data, that's just absolute nonsense. But what a weird clip with gardens that you can't get out of. I mean, that kind of gave me the willies, man.
But it's beautiful from the inside.
Yeah, you just can't get out. You can't leave. It's like the Hotel California.
But he goes into how, but it's not going to be like that. So we at the BIS have figured this out. So let me do another clip.
Digital payments result in a data trail that can be extremely valuable in commercial terms. Personal data also flow from social media, e-commerce, and other digital services. But consumers' trust in different institutions to safeguard their data differs widely. In a recent New York Fed survey, conducted in partnership with BIS economists, US households indicated that they trust big techs the least to safeguard their data. And these considerations open up several design choices.
So here he's talking about, we've had to study, who do people trust? Like, how, that seems to me like a marketing thing as well. Like, we've got to figure out how to build trust. People don't trust this, so how do we get around that? Even though clearly that's what we're doing, is we're giving immense power to ourselves and these tech companies as well.
Also, that scoring system from 1 to 7. Right? Did you catch that? It's all 1 to 7. No one gets a 7. So, but the data range goes from 1 to 6, and it's like, well, how do I know that the real numbers aren't like, big tech at 1 and financial institutions, which you say were 6, really more like 1.3 with a lot of compression at the bottom. I don't see a lot of trust in there, but nice try, guy. You know, anyway.
All right.
A crucial aspect in the design of CBDCs is digital ID. Should users be able to use CBDCs anonymously, or should they have to reveal their real name? And if so, who would be in charge of managing the identity system, and what would such a system look like? In technical terms, a key decision is between a token-based CBDC that allows for fully anonymous transactions and an account-based CBDC that is based on some form of user identification. An obvious difficulty with a fully token-based system is that all the problems with anonymous payments, such as money laundering and other illicit activities, would still be there and could be made worse. This is why some form of digital identification will ultimately be needed for the integrity of a CBDC-based payment system. Digital ID systems can be designed in quite a few different ways. At one end of the spectrum are purely private ID systems. And each ID could be completely separated, just as I have separate IDs for Google and Facebook. At the other end are government-issued ID schemes. For example, governments could directly issue a public digital ID, which would then be accepted by all private and public service providers. But in between these two models, there are many other possible forms of governance arrangements for digital ID. These alternatives are discussed in the chapter. For instance, there could be private collaborative schemes and various forms of public-private sector cooperation with a common governance framework to ensure interoperability between services.
So I think that word interoperability is really key here, because there's this idea that there's going to, and we'll go into another clip where like these people have a piece of the puzzle and these people have the piece of the puzzle and no one knows the whole thing. Of course, they do know the whole thing. And the thing that makes it interoperable is what's really important, where it has the appearance of being independent and separate, but is in fact not. I mean, what do you think about that?
Of course not. I think it's absolutely ludicrous to think that there's no one all-seeing eye in that system. But, you know, the tell in that clip that this guy is just completely full of it is the concern over money laundering, okay? This guy is coming from the BIS. You're telling me the BIS is worried about money laundering? Oh, really? Because I seem to remember in 2012, HSBC, right, big bank out of London, second biggest bank, I think, in the UK, admits, okay, it flat out admits, yeah, we criminally violated money laundering statutes and we criminally violated the Bank Secrecy Act. We straight up admitted, okay, they were criminally violating that act and those acts in the U.S. and yet nobody went to jail. And the reason they weren't prosecuted, HSBC, was because, and I have a documentary on this called All the Plenary's Men, is that the BIS had a very major hand in intervening in the U.S. in a case pending in the Eastern District of New York, the federal district court for the Eastern District of New York. The BIS specifically targeted that case and said, you know what, we're going to dispatch our guy, George Osborne, who's part of the Financial Stability Board within the BIS, to the U.S., and he told Tim Geithner, thou shalt not prosecute HSBC. And the reason he did that is that the prosecutors in that case were talking about prosecuting HSBC specifically, and the BIS had sort of spies in the DOJ meetings, and that word got back to the BIS, and they dispatched George Osborne, who was Chancellor of the Exchequer at the time, but really he was part of the Financial Stability Board in the BIS. He dispatched Osborne and said, hey, you got to stop this, and he did. He shut it down. And so I've got that all laid out. So for the BIS to sit up here and tell me that they're concerned about money laundering, what a total, that's a 100.0% complete crock. That's a total load of nonsense. So the notion that he's concerned about, worried about money laundering, I think you should take with the same grain of salt that you take the notion that he's concerned about your privacy. They're not. It's just a dodge.
Yeah. I also noticed too that like a lot of their concerns seem to be around their concerns or their, what they claim are their concerns. Like you said, like they don't care about money laundering, but even the general public, like the average person isn't really that concerned about money laundering either. I mean, most people are just concerned about making sure that they have food, and you know, they're not like staying awake at night going, oh my God, I can't believe there are people laundering money out there.
Right.
Like, you know, that's hardly like the least of most people's concerns right now. Like, I mean, probably always, but
You have to realize it's backwards world in finance. So when they say we're worried about money laundering, it doesn't mean that. It means we're worried about protecting our role in money laundering. That's what that means.
and you have some really
Okay.
great videos. I mean, I encourage everyone to check out his YouTube channel. And are you elsewhere than YouTube? Because I know, you know, YouTube's starting to become, you know, we need to get you loaded up
Well,
on another
yeah, I
another
mean,
platform.
I have mirror accounts at Odyssey or Library, I think is
Okay.
one, and BitChute is another.
Okay.
So yeah, my videos you can find them on other platforms.
Yeah.
But
you have
but as far as like, I don't do like Twitter or Facebook or website or I don't do any of that.
Okay, but you do have some really great videos that kind of go into a lot of detail about, you know, going back several years. You know, you've been
Yeah.
talking about this for a long time, and particularly I remember some of the ones that I've watched where you're talking about the lack of prosecutions in many of these
Yeah.
cases.
That's a real big. I mean, if you're not going to prosecute people, and you're going to tell people, listen, these people are above the law, which is what we said in the U.S. I mean, the Department of Justice, which is the only agency in the federal government that can prosecute people, put people in jail. When the Department of Justice says, you know what, we can't prosecute these big banks for fear of destroying the financial system. You know, we got to worry about collateral consequences is the language they would use. And we have collateral consequences written down in the U.S. Attorney's Manual. When they're telling you that those people are above the law, that they're telling you that you don't have the rule of law. And they're telling you that these banks have political power that no one in the federal government has. The president doesn't even have the power that these banks have. Now, the president may not be able to be prosecuted while sitting in office, but he can damn sure be prosecuted once he's out. And that's why Nixon needed the pardon from Ford. If he didn't have the pardon, he's going to get prosecuted. Bankers, I show in all the Planery's men, they're not prosecuted even after they leave the bank. HSBC, it was admitted that all the people who perpetrated the crimes in HSBC, all the money laundering for drug dealers and terrorists, they were all gone from the bank. So why not prosecute them? Answer, because the BIS own rules forbid it, and thus it was forbidden, despite the best wishes of people in the Department of Justice. The BIS won. So you have a criminal system. So it's a hugely important issue to understand that people who are above the law and people who can't be prosecuted, that's a sovereign power. That's the Blackstone formulation for that. Blackstone being the author of the Commentaries of the Laws of England in 1776, formulated it best. He said the king can do no wrong. He doesn't mean that the king, as a matter of fact, is like perfect, you know, like some deity. What he means is, by definition, by legal definition, the king can't do any wrong. So you need to find an alternative, because it's not the king doing wrong. You follow me? Mm-hmm. He is the law. And that's what we have. We have a system where certain banks are the law. You know,
Okay.
They're your rulers. They're your sovereign power. Not we, the people. We're not sovereign.
All right. So another clip.
Imagine that while users' data on CBDC transactions are stored centrally, other parties, such as banks or other PSPs, never see the full picture of transactions. Each would only need to see the sliver that it needs to. Users have control over their data and only share the piece of the puzzle that is needed in a specific case. Without the other puzzle pieces, no entity will have a complete picture of the user. By separating the payment services from control over the resulting data, CBDC designs can thus ensure users' privacy.
So there we are again.
Yeah.
We're going to have privacy.
Trust me. That sounds awesome, man. That's great. I trust you. Okay.
So we'll go on.
In a direct CBDC, not only is the CBDC a
Let me just real quick preface this. Let me go back here. I want to just preface this real quick. So this is where I've got 3 different videos where he presents we looked at the different options, and the 3 different options were the first one was direct CBDC, which where the central bank basically does the whole thing, and it's direct to the people. And then there's an intermediate architecture, and then they have a hybrid model. So that's what these next videos are, kind of going through the three different options.
In a direct CBDC, not only is the CBDC a direct claim on the central bank, here given by the blue arrows, but the central bank also handles all communication with the users, including account opening and maintenance, enforcement of AML/CFT rules, and day-to-day customer service. The central bank also maintains a full ledger of retail transactions. Such an architecture would imply a large shift of operational tasks and costs to the central bank. And this would detract from the central bank's role as a relatively lean and focused public institution at the helm of economic policy.
So apparently they're a lean and focused public institution at the helm of public policy.
Yeah.
That's again one of those myths that these are public institutions. I mean, he even says in there, like, we're this responsible public institution. But did you want to say anything about that?
Let me tell you this. Let me tell you something about the BIS legally. The BIS, where is the BIS headquartered? Answer: Basel, Switzerland. Okay, what is the BIS's agreement? What's their legal relationship to Basel, Switzerland? Are they like everybody else in Switzerland? They can be prosecuted. They could be subpoenaed. They could get, no. The BIS has an agreement with Switzerland called the Headquarters Agreement that immunizes the BIS, the Bank for International Settlements, from lawsuits, from getting subpoenas, from accessing the property. The cops can't come on the property, can't prosecute them. I think there's an exception for like auto accidents. So if some banker at the BIS gets drunk, goes out and takes out 3 people, yeah, he can be prosecuted. But anything else in the ordinary course of the bank's business, forget about it. So in essence, the Bank for International Settlements is a country of private people operating inside of another country. Okay, it's completely opaque. You can't learn anything about what's going on in the BIS. You have no access to the records. Switzerland doesn't have access to the records, and they're in Switzerland. So the notion that the BIS is some public entity is absolutely risible.
Let me just do this.
Of economic policy.
Let me just repeat that.
And this would detract from the central bank's role as a relatively lean and focused public institution at the helm of economic policy.
So yeah, but he said, John, he said that they're a public institution. So
right. Okay.
Okay, moving on.
Now ask him who's paying his bills.
What was that?
Ask him who signs his paycheck.
That's a good question. Okay.
An alternative model is one where the central bank does not record retail transactions, but only the wholesale balances of individual PSBs. And this is the so-called intermediated architecture. In this architecture, the CBDC is still a claim on the central bank, but just as with cash, the central bank does not keep a record of all the detailed record of the retail transactions. Those are maintained by the private sector. This means that the central bank only has a wholesale ledger of payments between the private sector payment service providers, not those between the individual users. The benefits of such an intermediated CBDC architecture would be a much simpler operational setup for the central bank, but a larger role for the private sector. By reducing the concentration of data, such designs could also enhance privacy. But the downside is that additional safeguards and prudential standards would be necessary, as PSPs would need to be supervised to ensure at all times that the wholesale holdings that they communicate to the central bank accurately reflect their clients' retail holdings.
So one thing that I
Yeah.
thought was interesting in that was he's like, one of the things that's nice about this is, it would actually save us money essentially. Like we don't want to manage all the day-to-day transactions.
Right.
That's kind of one of the things that I got from that. Like we'll
Right.
let these
But the flip side
PSPs
of that,
do that. Go ahead.
the flip side of that, he said it right there, is we get to supervise.
Right.
In other words, we're not going to manage the data; we're going to supervise it.
Right. So that was
sounds totally out of the BIS playbook.
yeah.
That's the system we're going to go with.
So, well, no, actually, it's not. I will argue that's not. That was the intermediate architecture. So the next one is the hybrid model, which is what I think is what they're going to go with. So let's go ahead.
In the hybrid model, the PSPs perform all the consumer-facing payment services as before, but the central bank regularly receives a backup of transactions and account balances of individual users. Now, in this slide, you can see that the ledger under the magnifying glass is more detailed, as it contains the details of individual users' transactions. The operational involvement in the hybrid model for the central bank sits in the middle. It's lower than that of the direct model, but higher than that in the intermediated model.
So, all right. So, what's your verdict between?
I
I
don't
like
think
the scale. I mean, it's interesting that they use a scale as if this is what's going on.
I just don't see even that second model there. I don't, at least not initially, going with that. It's too much. System's too big. There's 330 million people in the U.S. Just to kind of throw out numbers. If the population's 330 million, you throw in another, I don't know, 20 million businesses. You're talking about a lot of data. I mean, you really think you're going to keep a copy of that at the New York Fed? That's a good point. That's a lot of transactions every day. That's one of the reasons they're not going to go with a token system either, is that the computing power necessary to process all this is absolutely astronomical. Now, is it a stretch for them to get to that eventually? Probably not. But I think, again, it's like the commercial banks. This is a toe in the water. They're going to start easy on this. They're going to start like with the unbanked or with universal basic income, and they're going to build it out. I don't think they're going to start with that second part where they got a copy of everything going on. I mean, I think that's why, Jason, you saw the Fed bring in BlackRock to begin with, because BlackRock's got the muscle and it's got the computing power to handle $12 trillion of assets under management. The Fed doesn't have that. That's why BlackRock's brought in. And that's why I see that second system as much more a realistic option for the Fed, at least. I can't speak to other central banks. I mean, I think that's a more realistic option for the Fed than one where they've got a copy of everything. Who's going to, for what reason?
But the second system, they have to do more managing of the transactions.
But that's what they do now anyway. That's within their remit right now.
But they're not doing retail transactions.
No, exactly. They're not doing retail, but they're going to have to do the supervising anyway, even in the second system.
Yeah.
I that third one, I don't know. Maybe,
who knows? Yeah, we'll see. But either way, I don't like any. What's in door number 4?
And in a way, the other thing about having an intermediary like BlackRock do the dirty work is it gives the powers that be behind the people who own the Fed plausible deniability. We just have the wholesale data. We didn't know about the retail data. We didn't know all this stuff was, I don't know.
All right, well,
we shall see.
Yeah, we shall see. So I've got a few more clips here.
Indeed, multi-CBDCs that join up CBDCs across borders can mitigate many of today's frictions by starting from a clean slate, unburdened by legacy arrangements.
And, hold on. Let me bring this back up. Sorry. That the part right there where he says that you can jump in unburdened by legacy arrangements. So that to me kind of implies that they're going to incentivize the joining of this by like maybe doing debt cancellation, or what do you think? I'll just play that one again, but I want to kind of
Yeah, let me hear that again. I don't think that's what he means. I think that means universal basic income.
okay, let's see if let me see, is this the one?
In the hybrid model, the
Nope,
PSPs
sorry, that's not
perform
the wrong
all the
right one. Let me hold on.
Indeed, multi-CBDCs that join up CBDCs across borders can mitigate many of today's frictions by starting from a clean slate, unburdened by legacy arrangements.
So he says starting from a clean slate, unburdened by legacy arrangements. So I don't know, what do you think that means?
Well, I think when I hear the word legacy in that context, I'm hearing commercial banks creating money. And so starting new means from a retail level, someone who doesn't have a bank account at all. Okay. Now that's a bit bogus because the FDIC actually conducted a survey of people who are unbanked. There's 5% of homes or households in the US are unbanked, and 3/4 of them don't. They're unbanked because they don't want to be part of the system. So again, that's a bogus concern. But from the retail level, starting anew means you're now part of the digital system. You have CBDC. You were unbanked before, now you're banked. From the retail level, that means you weren't handling money before, at least money not coming directly from the source of the money. Like, for example, Amazon or even BlackRock is a good example. BlackRock is an intermediary. It's not a commercial bank. It doesn't print money out of thin air. So I think that's what he means when for the first time, intermediaries like data processors or Amazon or Google or BlackRock going to be handling money. And legacy means that refers to commercial banks. But I don't know. I could read that a couple different ways. But that's
and
how
I just showed a little piece of it too. Before that clip, he was talking about the different banks in different countries, kind of working together, kind of bringing everyone under the same. Well, I mean, they're already under the same roof, but under this new system. So I guess maybe I need more context as well for that video, but I don't know. I just thought that the phrasing was interesting to me.
A lot of the CBDC discussion is it's speculation because we don't have any. Well, there's a couple. I think like Seychelles or there's a couple places have them, but they tend to be beach resorts. No major economy has come out with the CBDC, so it's a lot of guesswork. All of this.
Someone asked, "Are you familiar with communitarian law?"
No.
Okay. So could you share perspectives on the untouchable legal status of those who own Bank for International Settlements, other powerful central banks, and why it matters to ordinary people? So, I guess this is kind of questioning about who actually owns the BIS and the central banks, and I've never really been able to figure that out. I mean, I know that the member banks hold stock in the Fed, but it seems real convoluted in terms of getting down to actual ownership there. But I don't know. Do you have any thoughts on that?
Yeah, if you try to figure out who owns the Fed, there is limited. Researchers have looked at it, and a couple of different sources have concluded that the Fed, that the regional Federal Reserves in the U.S., let's just take the New York Fed, that being the dominant example, they account for something like half of the reserve issuance, that the regional Federal Reserves are owned and dominated by 8 families. And a couple different researchers have independently produced evidence to that effect. I wouldn't say they've proved it, but they've produced evidence to that effect that it's really eight families. But you're never going to find that, because if you submit say, for example, a Freedom of Information Act request to the New York Fed, and you say, hey, tell me all the people who own the stock in the bank, or tell me all the people who own stock in even JP Morgan Chase, or tell me every entity that has access to the data that you maintain, Fed. Okay, tell me these things. You're going to get a response to the effect of that's national security, or that might be one response. Another response you're even likelier to get is we're not a public entity. We're not subject to FOIA laws. We comply with the spirit of the law, but we're not subject to those laws. And so all these institutions ultimately are private, and that's why. And they're not private because as soon as they go public and like become a bona fide governmental institution, they're open to sunshine laws, and they can be hauled in front of Congress and questioned. And that's just not going to happen. They could be subpoenaed and everything else, and that's simply not going to happen. And so you don't know. And the reason this matters to ordinary people is that these are the people who are in charge of the entire monetary system, right? It's private people who refuse to be identified. And so it is completely contrary, not only to the spirit, but to the letter of the U.S. Constitution, which says Congress shall have the right to coin money and regulate the value of. And yet here you have private entities coining money and regulating its value. And when you try to explore, what are the reasons behind the decisions you make in regards to coining money and regulating its value, they're going to tell you to pound sand. That's why it matters. And it matters because you're being ground down into a nub of your whole life, working for people who can create money out of thin air and lend it out to you at interest. And you got to borrow it, and you have no other system. So that's why it matters.
Yeah, and the frustrating thing for me too is, I don't know. I've been reading about and trying to understand this and looking at different solutions. Whether it's Public Banking Institute or even I started out. It was first the gold bug people that I first learned about a lot of this stuff from and realized that was actually their solution was problematic. But there clearly are solutions and.
Yeah.
What those are, we should have a discussion and a debate about, which I don't have a solid. I see pros and cons to different people's proposals, but we really could. We have this defeatist attitude, like, this is just the way things are, and there's no way we could ever change it. But actually through taking back the power of money creation and changing the design of money allows us to actually solve a lot of these other problems that we literally cannot solve without doing that. That's what I would argue.
Right.
Like you cannot solve the environmental issues. You cannot solve the issues of poverty.
Right.
You cannot solve the issues of war. So if you care about any issue, you need to study money, as boring as it is.
Yeah.
So, and there are solutions. Like I said, like if we just demanded, like, even I think the political thing's a joke, and people get mad because I'm no longer voting for someone who does not. I'll vote for someone if they're if they're hardcore against war, if they are hardcore against the central banking system, and for actually creating something that's better. I will vote for that person, but I will never ever again vote for somebody who doesn't stand up on the most important issue out there, So that's kind of
Right. Well, that describes an awful lot of people.
Yeah, for
Right.
sure.
I mean, Dennis Kucinich did back in the day, but he was kind of marginalized.
When I just interviewed you talk about bringing people up to help be held accountable in front of like Congress or some sort of hearing, but that doesn't happen. Like all these
No.
people that have power to do that. But I did just interview Cynthia McKinney recently, and she was really amazing at doing that. But it's pretty rare, and we even brought up like the church hearings and like how incredible that was, that you had hearings that were actually bringing out into the open some of the stuff that CIA was up to. But we don't have that at all. Like everyone's bought and paid for. So the fact that it just blows my mind that people still believe in the political system and they think that actually is going to do anything. It's like you said, it's child's play.
No, I mean, the criminals have taken over. Okay. you're not gonna cast a vote to divest them of power. How does that work? They're above the law. If they're above the law, they're above your vote. You get it?
Yeah.
It's not the math is not complicated on that one.
It's not.
The denial is very high on that one, though, about where we are.
So can you maybe give me some success stories of how, you've maybe some people that you've brought around to looking at this issue, or how people within your friends or family or circle have responded to your work and looking into these things? Have you had a lot of success?
No, I don't. No, none. But I will say that I'm a soldier in a war, and the war's been going on. At least I've been aware of it since, say, 08, 09. And there's a lot of people who, I was telling them in 08, these criminals, they're doing this stuff, and they're like, oh, that's just crazy talk. And now they accept it. Okay, so there's never, ever that moment where they say, the light bulb went off, and I now see you're right. There's sort of the pretense that they sort of got that all along when I know they didn't, because I got a really good memory. And I remember what people said and when they said it. But, so I'd say we're winning the war for people's minds, but individual success stories, individual battles, nah, can't really help you there.
Yeah, I do think it's a war I think it's part of a continuum that connects to slavery, that connects to the enclosure laws, to, like just going back. I think this is part of a continuum of really those who want to dominate and control, and then people that want liberty and want to help and make the world a better place, and then in between seems to be like the majority who are kind of indifferent. I don't know. But I do think that this is part of something that's going back way further than 2008. Like I see this as going like way back, from like a spiritual, for lack of a better word, point of view,
Well, Delmar, Alexander Delmar says, basically the turning point, the switch got flipped in 1660s in England. He says as soon as you turn the control of the money supply over to private individuals, you're done. I mean, you bought into a whole bunch of things because they're going to abuse it. So yeah, it's been going on a long time.
Yeah. Well, I'm really grateful for you giving me more of your time, and I will definitely keep following your work and hope we can do more of these, periodically, because I really think like a lot of people are looking at what's going on with the COVID situation and impact investing and the digital IDs and everything. And it's all connected, but really a big piece of this is really we have to be paying attention to what the Federal Reserve, the BIS, the Bank of England, what even the IMF, the World Bank. I haven't even really followed what they've been up to since the whole COVID thing started. Any changes that they've had. I should actually look into that.
The IMF, unlike the BIS, the IMF does have money issuing power, and they've talked about issuing special drawing rights to the tune of something like $650 billion. So that's a sleeping dragon there. Don't turn your back on the IMF.
Yeah, of course. Well, and I haven't looked too much in it, but I read an article, talking about how they're proposing a Bretton Woods 2, and so I don't know if you've looked into that at all.
God forbid. No.
Yeah, look up Bretton Woods 2.
Yeah.
We've got another Marshall Plan coming. Build Back Better.
Yeah.
So do you want to? Is there anything that we didn't cover? I didn't ask. Let me just see if I got all those questions. Before we go, is there anything that you wanted to really address or?
No, not really. It's just the rule of law is my thing, and I need to do a couple of videos. People don't understand how important the rule of law is, and I think they don't understand what it is. So I need to focus on that because. You don't realize how bad You don't realize what a bad position you put yourself in without the rule of law. And that once you don't have the rule of law, your options are limited. And I need to kind of get back on that horse.
Yeah, I'm torn on that one because on one hand, yeah, I definitely think rule of law is important and useful, but to me, it's not the end all be all because look at history. So much has been done. So many of the most horrific things have been done throughout history that have been completely legal. So I mean, leaving aside, what's outside the law and the fact that there is not like one law. There's like different layers to it. And
yeah, but the rule of law is it's not that's legal. That's not the litmus test.
Okay.
The rule of law is used to say to the powers that be, you should not be able to, if you really have the rule of law, okay, if the rule of law is really supreme, then you can't have anybody above the law. You can't have anybody above the law's reach, and you can't have anybody beneath its protection. And so there's certain things that follow from the rule of law. And the rule of law is a tool that people, okay, the retail side, that we the people can use to hold the feet of the powers that be, hold their feet to the fire. So let's take something, you're right. Some things can be done, they're very legal. I'm not saying the rule of law is perfect. It's not, but it's an ideal. Okay? It only exists as an ideal. But it's a tool that you use as a person to get what you want from the powers that be and make them behave correctly. So, for example, in the civil rights,
looks like I may have lost John. Hopefully he'll jump back on here real quick here. I'm gonna wait and see if John jumps back on. We kind of lost the connection here. Sorry about that. We did get some good time in, which was good, but hopefully he'll rejoin me here in a moment. But yeah, I'll just say something too about that. I don't know if John. Okay, so I'm gonna wait a minute and see if he. Oh, there he is. Hey, John.
yeah.
We lost you there for a quick minute. So do you want to just finish what you were saying? Like just the last, you were talking about the rule of law.
And where'd you lose me?
Just like 30 seconds, a minute.
Okay, so I'm going to use the example of civil rights. You had a system, like you pointed out, where it was legal to make black people, a municipality could make black people sit at the back of the bus, right? And it was unjust because it's like, well, we're all equal under the law. Why are they beneath the law's protection and nobody else is? And it enabled you to go to the powers that be and say, this system is unjust and you need to change it. And it could force it forces the powers that be to put a paper bag over their head and defend the system that they have. And it doesn't allow them to hide behind legalities. It's like, go ahead and defend that on the grounds of what? Because it's not consistent with the rule of law, and then you can get what you want. And what's happened in the U.S. is we've dispatched with that. The Justice Department has said, you know what, these banks are above the law, and thus there is no rule of law. The banks are the law because they can't be prosecuted, and that's a very poisonous thing. It's one thing to say the system is unfair, and as a matter of fact, but we're far beyond that. We're to a point and have been at a point where the powers that be are telling you not only is it unfair, that's the way it is. That is the law.
Yeah, and I think the concept that I've always been attracted to, which is the golden rule, the idea that if you have some sort of principle or some sort of a law, that everyone everyone is treated equally under it. And we obviously have a system where different people don't have to go by the same set of standards. They even say, like, the World Economic Forum says you will own nothing, but you'll be happy.
Yeah.
But of course, there are going to be people that own something and own a lot. Actually, I mean, they're not getting rid of, they're not getting rid of the system of ownership. They're just getting rid of it for us, or at least that's what they are proposing.
Right. They're going to own you.
Right.
In other words, the ownership is the shift is you're no longer a person. You're chattels.
Right.
You will be owned.
And I heard it described like our rights are now being converted into conditional privileges.
Right.
And
Meaning they're not rights.
and actually, one of the books that I've been reading is Pagans in the Promised Land, and
Uh-huh.
it's all about Stephen Newcomb. He's a Native American uh, property. He deals with property law, so he's a legal scholar, and he's talking about the origins of property law in America, and he says, that they actually derive from papal bulls, but he talked about the word freedom, and the dom in freedom is like domination or dominion, or like the dome. So the idea of freedom is you are a citizen of empire, but you're not allowed to not be a citizen. But as a citizen, you're granted some rights, or you could actually probably more rightly call them privileges, because my idea of a right is something that's inalienable, that is not given to me by the government or by the state, but they're basically conditional privileges, for you operating as a citizen under the freedom. Anyways, that was just a concept that actually Allison is the one that turned me onto this book, but that idea kind of blew my mind, because my thoughts about what freedom were actually kind of quite a bit different from that. But now we have this whole thing of, your the idea of rights itself is kind of going away altogether, even as we've previously known it, and they're becoming more conditional privileges.
Yes, that's not accidental. That's what I'm telling you. It's not accidental. That's the loss of the rule of law. This is natural extension of that. That happened in 2013.
Gotcha. Well, I'm really grateful for you and your work, and everyone who's watching. Please do check out John's work at Best Evidence is the YouTube channel, and then you've also written you have some stuff with Solari Report, and is there any other stuff you have elsewhere online?
No. There
No?
used to be a blog, but that's gone now.
Do you want to real quick just say something about the lack of people that, I'm forever stunned that there aren't more people, even within like activist circles or whatever you want to call it, that aren't looking into these issues. Like that's why I was, when I found out about you, I'm like, oh, I got to get John, because holy cow, there's actually someone that's talking about this that understands it. A lot of people that talk about these issues are in their little camps, the gold
Yeah.
bug camp or whatever camp,
Right.
and it seems like you have a broader.
That's it. You got it. That's Plato's The Cave right there.
Yeah.
So I mean, yeah, there aren't many, because the powers that be do a masterful job of getting people of creating a consumer culture, in creating consumerism that includes selecting personalities and selecting tribes. Watch TV, but decide which personality you want to be. Oh, you want to be a radical? Here's what radicals do. They wear a leather jacket with fringe on it, and they go around and they beat on bongo drums, and they bitch about issues A through Z, but they absolutely, under no circumstances, did they talk about money creation, because that's conspiracy theory.
Yeah.
And
Well,
people, no, it sticks. You gotta be willing to peel the onion, and most people aren't. So
Yeah. Well, I'm sure you support MMT, right?
no,
I'm joking.
I mean that's yeah.
That was a joke.
I take a swipe at it in one of
Yeah.
my videos. Like,
Yeah.
The notion that all money is dead is just preposterous. It's wrong. It's legally incorrect. The notion that all money is dead is legally, it's just wrong. They're two different words. I think of Kevin Spacey in Swimming with Sharks holding up the equal and the sweet and low. He says they're not the same. They're different. They're different. One's pink and one's blue. They have different names. Not the same. Different. Money and debt are not the same. They have different names. They're not the same. Legally, they're not the same. But MMT will not let go of that. And so for that reason, that's one of those positions that it's just like, that sounds clever at a cocktail party. But if that's all you got, take a hike.
Yeah. Well, and even again, their solutions, they're bringing you into solutions that don't actually give the power back to
Right.
people. So
Ask them.
I mean,
Ask them. Why should private banks be able to issue money? Why should they have that privilege? And they won't answer that question. Their only answer is, oh, it's better than any other system that's ever been devised, which is complete nonsense. Like, well, that's the system that you telling me the 2 world wars is better than any system we ever had before? No, it's not. It's worse.
yeah.
On its
And
face.
a Great Depression.
Yeah.
I mean, how many
Two.
booms? How many booms and
There was
busts?
a 1920 depression too.
Right, right.
People forget about that one. Both came on the heels of the Federal Reserve being created in 1913.
Yeah.
So I don't know. I'm not an MMT fan, obviously.
Yeah. No, I knew you weren't, and I was being
Yeah.
snarky. But anyhow, so I thank you again, John, and thanks everyone for watching, and please follow John's work, and hopefully we'll do this again.
All right. Thanks, Jason.
All right, let me. Okay.
All right. You get anything else?